Today I'm going to dispel the myth that you have to have a 2-to-1 or 3-to-1 target to stop loss ratio to be profitable. Don't miss it. Hi, this is Tim from TradingStrategyGuides.com. You guys remember whose channel this is, right? It's your channel. You get to call the shots, so here's what we want to do if it's okay with you guys. We want to have an Ask Me Anything session. You know, anything you want. Do you guys want that? Do you have questions for me? I'll tell you what, give me 200 likes and 50 comments on this video, and we'll post a link on the community tab for you to ask your questions. How does that sound? You gonna do it? Do it. I had a question on a video about the reward to risk ratio that I use. It's definitely a subject that can't be addressed in a couple of lines on a comment, so I'm going to spend a few minutes telling you about it here. I'll try to keep it as non-mathy as possible. And I told you Friday that we'd revisit the Dish Network setup since the last one was blown. We'll do that today too. And of course, a bunch of charts. Always remember though that charts are the footprints of money. Then later on, today's trading maxim from the great-grandfather of a reality TV star. It's Wonderful Monday. Does that make it wonderful? Remember to click the subscribe button and hit that bell so you don't miss any great trade setups. All right, let's look at all these charts now. We've got some profit from the weekly US dollar Mexican, and the remainder is locked in, and we're waiting for the PSAR to come down here below the break-even point so we can start trailing the stops. Hopefully it will stop doing this mess right here and drop. If not, at least we've got some profit on this one. Sheesh, this Euro Swissy keeps giving and giving and giving. Right like that. The stop is currently at 107.50, locking in 145 pips. Keep dropping, baby. Well, spot gold is finally starting to move up nicely right here. We're halfway there, living on a prayer. Hey, that would make great song lyrics, wouldn't it? Looking for our target right now around 16, a little over 1600. Well, Boston Beer pushed right up here. Hit our first target. We got half off profit, locked it in, and then you see what it did Friday. Bam! Hit our break-even stop on the second half. So we're done with this one for a while. Why do I trade weekly charts again? They're so slow. Anyway, Bitcoin still looks like it's consolidating right here, so I'm giving it this week. If it's still in this consolidation, I'll take the little bit of profit we've got and look for somewhere else to put it. Yep, I didn't like the look of this platinum, and this morning it did the unthinkable. Came right down here and hit our stop. Stopped us out. As you know, we don't take full stops too often, but it is what it is, right? Done with platinum for right now. The New Zealand dollar, Canadian dollar, MAX setup is not looking too healthy right now with this bearish candle right here. If this closes below the 20 EMA today, I'll be taking the loss and watching for another close above the 20 to try again. Friday, I told you to watch the Euro Japanese yen for a trigger, and we got it right here. I'm short from 120.48-ish with my stop at 121.50-ish, and we're more than halfway to our target of 119.80. Let's talk just a bit about that widespread myth, reward to risk ratio. As you may know, or at the very least will know if you continue to watch this video, I use a smaller target than stop loss. My target is always 1 times the average true range on the trigger candle, and my stop loss is 1.5 times that same ATR. Due to that fact, I regularly get questions regarding my reward to risk ratio. I know many trading trainers will tell you that you can't trade with a reward to risk ratio of less than 1. By the way, just so we're all on the same page, a A reward to risk ratio of less than 1 means that my reward or target is smaller than my risk or stop loss. Those trainers will tell you that you have to have a bigger target than stop loss or you can't profit. Well, and here goes controversial Tim again, they're wrong. That's actually very linear thinking. It assumes there's reward and risk and no other factors at all are involved. Perhaps their systems will only work that way, but there are hundreds or thousands of systems that don't work that way. But I'm not going to address all of those systems, I'm only going to address mine. And I apologize, but this is going to get a bit mathy. I know there are lots of you who aren't math geeks. In fact, that probably applies to most of you, but bear with me, I'll try to keep it to a minimum. Let me start by pointing out that my reward to risk ratio is even worse than you're imagining. You see, when my trade hits my stop loss, it stops out both positions that I entered into the market. But when my first target is hit, it only closes one of the positions. So hitting the stop results in a 2% loss based on my 2% maximum per trade loss, and hitting the target only results in a 0.67% win. So my reward to risk ratio is not 1 to 1.5, it's actually 0.5 to 1.5. Of course, having a bigger reward to risk ratio has to assume that you always have a 50% win rate. In other words, the reward to risk ratio assumes that you're flipping a coin. But the whole point of trading is that we're looking for a statistical edge in the market to increase our win rate above 50%. Sometimes that statistical edge involves reducing our target so more trades hit the target than hit the stop loss. So just reducing the target can result in a higher win rate and therefore no need for greater than 1 to 1 reward to risk. You see, you can profit, for example, with a 0.9 to 1 reward to risk ratio if you have a win rate of 56% or greater. But there are two other factors in my trade management strategy that disrupt the reward to risk ratio myth. Number one, every video you'll hear me say the following. If after entering the trade we get a candle that closes back inside the pattern, we will take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout of the pattern should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. As a result, only 10% of my trades actually hit the full 1.5 ATR stop loss. Number two, as you know, I lock the second half of the position in at break even when the first target is hit. 42% of those positions go on to make even more. A few have gone on to make as much as 5 times what we would have made by taking the whole profit at the target. That's what I call letting your winners run. Listen, I'm not telling you to take my word for it. Test it. Satisfy yourself that I'm right. As I told you in Friday's video, that's part of what testing is for, to satisfy yourself that your strategy is sound, that all of your strategy is sound. Try different targets and stops. Change the target to stop loss ratio. See what happens. That's also why I always tell you to use a trade management method that works for you. If you don't have one, you can start with mine, but try others out to see if they suit you better. All right, let's take a look at the Dish Network setup now, shall we? As I mentioned on Friday, the Dish Network continuation triangle got blown, but now it's looking like a nice ascending triangle. An ascending triangle consists of a strong resistance level like this one that's been well tested and a series of higher lows in the form of this uptrend that continually puts pressure on the resistance level, eventually causing it to break. In addition, I like to see a nice decline in volume and volatility like we see right here. I'm measuring the volatility using a 14-period average true range, or ATR, which shows us the average of the length of the last 14 candles. And here's the trade plan. We will buy a daily candle close above the ascending triangle, or above the 37 level. On the breaking candle, to take a full-size position, we want the volume bar to reach all the way up here to the volume average. If it doesn't quite reach the average but does reach 75% of the average, I'll take a half-size position to reduce risk. You can calculate the percentage by taking this volume number, dividing it by this volume average, and you should get at least 0.75. If you don't get 0.75, stand aside on the trade. The stop loss will be 1.5 times the ATR, and the first target will be 1 times the ATR. So what that means is, on the breaking candle, if you get a close right here, that will be your entry point. You will buy at that point, and on that day you'll look down here at the ATR, multiply it by 1.5, and you'll set your stop loss that distance behind the entry. You will then set your target 1 ATR ahead of the entry. If after entering the trade we get a close back inside the triangle, we will take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout above this pattern should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we will close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. These two rules are the very definition of cutting your losses and letting your winners run. Typically I do this using 2 positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we will have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade. And that's the new setup on the Dish Network. Remember, my intent here is only to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And my intent for the trading maxims is the same, to help control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today, Tim's trading maxim number 49. Success seems to be connected with action. Successful people keep moving. They make mistakes, but they don't quit. And this comes from Conrad Hilton. You may recognize the name Hilton. Whether you know it from the hotel chain or because you've heard of Paris Hilton. Of course, who hasn't heard of Paris Hilton, right? She, of course, is the great-granddaughter of Conrad, the founder of the Hilton hotel chain. Anyway, I'd say he was fairly successful in what he did. And maybe he's someone we should listen to, right? In any case, success requires action. Success won't come to you just sitting in your chair. Even winning the lottery requires you to go out and buy a ticket. Don't ever stop moving. Don't ever quit. Or be like me, quit, but just don't stay quit. If I had stayed quit, I wouldn't be where I am right now, but that's a whole other story. But don't listen to me, listen to Conrad here. And remember our daily Dish Network trade here. We're going to buy a daily candle close above the ascending triangle. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. And also remember to sign up for my free Trading Picks email list to make sure you don't miss any of these great picks. I send out about 3 or 4 trading picks a week from all different markets. The best thing about it is it's free. I'll put the link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video, or both. And remember, the only stupid question is the unasked one. And don't forget to tell me if you want to have this Ask Me Anything question. I need 200 likes and 50 comments, so put them down there. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have a great Monday, and I'll see you Wednesday.